Okay, recording this video on Friday, the 14th of April 2017. Hope you're doing well. Hope you've had a good week's trading. So we've got a long weekend, Easter weekend. No trading today on Friday. The markets are shut. We're back on board on Monday. And I think we've had a good couple of weeks trading because the ranges have been pretty decent. This is my handy dandy range chart where I divide the days up into high, medium or low range days. And the blue bars represent high range days. And you can see the last 2 weeks of trading has been pretty darn good for range. Contrast that with the 2 or 3 weeks prior to that, and we had a lot more kind of low range and average range days kind of going on. So range is just critical for day trading. If you got no range, the market tends to be slow, kind of moves backwards and forwards, doesn't have any momentum, all those kind of bad things kind of happen. And I make mistakes on low range days. Yesterday, Thursday, was a great day for trading. I'm going to tag on my day trade for this. This is the activity on the 500 tip bar chart, multiple time frame view, beginning of the day. We found support after some data releases kind of pre-open. You can see blue professional bars kind of coming in here and on the retest. It's almost like a triple support kind of comes in here. And then as soon as we start breaking above resistances on the low and intermediate time frame, we trigger into a confirmed uptrend kind of going on here. And this is where I got in long 38 even, out at 44 for 6 on this move here, just as we went to, I think we went past the exhaustion. It was up here at 44s where I was getting out. Then the market went for pullback to end of trend, and we had a classic 5-step setup kind of reversing and going the other way. So step number 1 is exhaustion by bearish divergence for a short trade. So there we go. Those are the signals going on there. Step number 2 is kind of pullback to end of trends. We get a nice one, pullback to end of trend on the intermediate time frame. And then we get the first, step number 3, sign of weakness there, and that's when we start breaking supports. We have a low risk entry point. There we go. That's that point there. Comes in right at that test. Bang. That's the entry short. And as soon as we start breaking supports on the way down again, like here, we've got confirmation that we're in a reversal trade kind of going short. This exhaustion sell on the way down is showing the strength of the selling into this move. So you're waiting for, a double one of these. So that's selling it out of this channel, and then this is picking it up. This is the second exhaustion pattern kind of here. The first one's getting us going. The second one's kind of taking profits and picking us up. And then when we go pull back end of trends, bullish divergence kind of comes in, we start to find some strength going on. But another rule of thumb, only maximum 2 trend moves per day. That's just a rule of thumb, just a rough gauge. So we've had our uptrend, we've had our downtrend. So are we going to break into a strong uptrend move? No. Chances are, highest probability is no. We're going to continue in the downtrend. So we have just a little bit of strength. We bounce off supports on the highest time frame, and then bang, continue down to the end of the day. After 2:30 or so on, more exhaustion patterns, pull back to end of trend on the highest time frame, and everything kind of slows down, kind of down here. So don't take trades, reversal trades. We had a low risk entry point, kind of setting up here. That is a very low probability trade because we have 2 trending moves per day. 1, 2. Not a third breaking up into an uptrend at this point here. So I didn't take this short trade kind of going on here. I'd made good money out of that first trade there, so I was done for the day in the first 30 minutes or so. So I was kind of happy with that. But what is the bigger picture? The bigger picture is that all this weakness that we've had is because of the seasonality pattern over the last several days. So we are coming up to, or we are around tax time in the US. And I think the 18th, if that is, if I'm right, if that's kind of Tuesday's date, usually it's the 15th of April for kind of tax time. But because of Easter, the weekend and so on, I think it's been delayed to the 18th. So what we see at tax time is this classic kind of V reversal in seasonality. First of all, we have profit taking coming up to tax time with people wanting to raise cash to pay taxes, and then we get the money rushing back into the market, into tax advantaged investments. So that's why we have a bit of a V pattern here. We've still got a few days of weakness to go. This is the weakness that we've had so far. I mean, it's been down the last week or so, but not hugely so. It's not been a sell-off, I would say. But let's wait and see. Kind of Monday, Tuesday could get interesting. I think we're kind of breaking some supports, and I think we got a little bit more downside move to go because of this seasonality pattern. But then we should bounce back because we'll get some of those investments kind of going on. This was, exactly a year ago what was going on. This is the seasonality pattern. You can download that. Last year's pattern, yeah, we had a little bit of weakness into the via reversal, but it wasn't particularly weak. Strongly weak, and then kind of bounce out of that wasn't exactly a kind of particularly strong kind of bounce out. But different years, kind of different patterns. Let's see what happens over the next couple of days. The other thing that happened over the last few days, we had end of trends go off on all of the daily indices. So we got the Dow here. End of trend's gone off the last couple of days. This is the NASDAQ, signaled last week on the NASDAQ, pull back to end of trend with a flush pattern. Here's the S&P 500 pull back to end of trend with those amateur bars showing the weak buying going into that end of trend, and a slightly different pattern on the Russell. It's not really, this was kind of pull back to a dirty end of trend, and it's been playing some different kind of resistance and support. It's not been as strong a trending move. NASDAQ's been a nice, look at that, nice strong trending move, but over that same time period, basically gone nowhere on the Russell. But end of trends kind of came out over the last week and a half, and that's why we've had trouble kind of getting through to new highs and strong uptrends and so on, and then mirror that with the seasonality pattern, and that's why we've been getting the weakness that we have. It's been a nice pattern on the 45-minute chart of the multiple time frames. So this is daily data only, so no overnight data. Don't normally show this because I like using tip bar charts. The 4500 tip bar charts, frankly, it's a little bit of a mess at the moment. There's a lot cleaner picture on the 45-minute chart. Usually they kind of line up and are a little bit kind of closer together, but the 45-minute chart is the prettier one of the group. And you can see, so 45 minutes times 3 times 3, because that gives us the intermediate and the high time frame, goes to 405 minutes, which is the number of minutes in a day session of the E-mini. So we have a 45-minute chart, an intermediate chart, and the highest time frame chart is a daily chart. And so that's the pullback to end of trend on the highest time frame there that you're seeing on this daily chart, pullback to end of trend. That's the same thing as that. And so our left shoulder was a nice kind of pattern, exhaustion buy, bearish divergence flush. Then we finally rounded up with pullback to end of trend on the intermediate time frame here. We have our weakness. We get caught by support while we're finding this pullback to end of trend, and then really it's been weak going ever since there with exhaustion buys. I thought we might kind of test a little bit higher above 2380s or so, but no, it was pretty weak kind of buying into that 6350. It's kind of as far as we could get. The end of trends kind of came in. We've had that low risk entry point kind of come in that's been confirmed now, so we got weakness kind of going on. I would suggest on the downside now we're breaking the lowest time frame, the intermediate time frame. We've got to go see some pullback to end of trends on this time frame, on those low and intermediate time frames, and then also have cyclical support come in on the highest time frame. So I think we're going to have a little bit of kind of trouble on the downside. We've busted out of this is kind of the better trend line indicator. We've been in congestion here, and then with Friday's weakness that we had, we've busted below a rising support level here. So that's got to go find the next level down and form congestion and maybe kind of break back up as we get the the cyclical, the seasonality kind of V pattern. And on better X trend on all the charts, the Dow, the S&P 500, E-mini, NASDAQ, Russell, forget the weekly chart here, but you can see we're under the lip. We broke into a downtrend, we came back, tested it. Each of these times we came back, could not come through there to continue the uptrend, and we got this weakness kind of going on. So it's pretty weak at the moment, and we got some seasonal weakness to kind of go for the next couple of days. So let's see what happens next. But we're getting oversold type readings versus the bonds. So you can see here we were overbought versus bonds. So I used the SPY and TLT. So those are two ETFs with equities versus bonds. We can put them on the same chart on TradeStation, and we can calculate an oscillator here, and it shows us overbought and oversold. We were overbought over here, And this was my argument about rebalancing between equities and bonds. And now you can see we've had the strength in the bond market and weakness in equities, and we're starting to get kind of oversold type levels here. But, it's just a couple of bars, like that. We could see, well, who knows what we could see. The types of patterns that we've seen before, a fair few days of weakness, then we kind of get V reversals, kind of nasty sell-offs and double bottoms and testings kind of going on. So let's see, it's starting to break down, but then, at some point the professionals will step into this weakness and we will hold. The other thing that's going, and just to remind you on the bonds have found strength because we have had a classic pattern. Here's the sell-off in bonds, and then we had all these supports come in. Here's pullback to end of trend on the lowest time frame. Then it runs through pullback to end of trend on the intermediate time frame. We've got support on the highest time frame here. That's that line there. All coming together, and then we break above resistance into this strength kind of going on here. So that's what's going on with bonds. Bonds were running support on the highest time frame to resistance on the highest time frame. So we've got this kind of trajectory kind of going on. So bonds are strengthening. Equities have been weakening, but at some point, the equities will find a level where the professionals will come in. The other way to look at it, exactly the same chart with the SPI, SPY, and FXY, which is versus the yen. So this is a measure of the carry trade, when the carry trade gets overbought and oversold. And we've had, again, overboughts into this level here, and we're now starting to see oversold levels kind of going on here because the yen has started to strengthen. And again, the kind of patterns that we've had previously, into these kind of V reversals. There you go. You can see what this kind of typically looks like. So I think we've got a few more days of weakness to go until this starts to catch and kind of go the other way. And funnily enough, I don't know, the yen picture and the 30-year bond picture looks incredibly similar. So this is, the sell-off in Japanese yen got caught with pullback to end of trends on the lowest time frame. We tried to make pullback to end of trend on the intermediate time frame, but we broke above there, showing the strength. There's our support on the highest time frame. We're breaking above resistance here, and we've got all these kind of run-ups in the yen, the strength in the yen kind of going on. Carry trade, gets kind of in trouble when the yen starts to strengthen because people are borrowing in low interest rate currencies like the yen, investing in higher risk assets like equities in the US. And when the currency starts to kind of go the other way, that all is dandy if you can get an equity run up and then a decline in the yen. Those are both kind of good for you. But as soon as the yen starts to strengthen and the equities market kind of goes down, your carry trade gets in trouble and you start kind of getting margin calls, needing to repatriate money, blah, 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 blah. So we have started to run into trouble with the way the yen and the equities markets is running at the moment for the carry trade. So that was a big kind of rip around the charts. The last thing to say was just a recap on the last video I did. I thought we'd have fireworks in the Forex markets 2 weeks ago, because we were close to kind of breakout levels, and we just bounced off those breakout levels, and so all of those kind of currencies, with the exception of the yen, kind of rolled over and went the other way, and we had strength in the dollar, and that's what we've had over the last 10 days here. And I put out the video when we were close to this area here, where we were kind of flirting with that support, where we kind of going to break it and continue into the downtrend. Well, that's not what's happened, but we've come back up now to dollar index having a low risk entry point here, with resistance kind of coming in, having had some weakness. So this is actually a 5-step potential setup, but for confirmation, we need to start breaking supports. So if we break this support here at 99.79, close below that on a daily basis, that would give me some kind of confirmation that we've got a reversal happening in the dollar index. So here, first step, exhaustion by bearish divergence for a short trade. Second is we start running into the pullback to end of trend. So we had one on the lowest time frame, that's early, and then one on the intermediate time frame there. So that's step number 2. Step number 3 is the first sign of weakness. So that's the break of support that we get there. Then step number 4 is a low risk entry point, which is that kind of popped up there. and confirmation will be breaking supports again. So if we break this intermediate support and start kind of heading down, that would be a confirmation of a reversal trade on the dollar index. So it didn't work out, a week and a half ago when I put out a video saying, expect some kind of trouble in the forex market. But now we've got a low risk entry point kind of popped up on the dollar index. So potentially, it's this week. But wait and see. You kind of wait for the breaks and trade these setups rather than kind of your gut deal. So there we go. Longish video. Apologies for that. But it should become some fun trading next week.
Just been in this trade about a minute or so. It's long 38 even. Got long on this break above resistance on 2 time frames. Actually 3 time frames got going on here. So I'm just going to move my target out to 44s. Got a couple of news releases, whatever. Consumer confidence, consumer sentiment, 8:45, 9 a.m. And they tend to move the market a little bit. That was another Rambo pattern. So we had one here on 1500, a little bit of weakness, and that's just waited for that and then jumped in at 38s. We just had another one here, but that blue professional bar was kind of on the retrace, a little bit like this one. So a little bit of amber activity up there. And here we go. It's a double break of both time frames. Give us kind of a confirmed trend kind of going on here. In terms of the overnight activity, it's pretty messy. And then we had all of these blue professional bars kind of coming at the lows. And then this little one down here. That activity there. So let us see. There we go. That's all the Rambo patterns. Jeez Louise. But it is breaking kind of three time frames. 1, 2, 3. So let's see where this thing goes. Okay, it is 8:45 a.m. So consumer comfort number should be coming out. It's our low risk entry point. Just kind of signaled on that little bit of weakness. So we've still got some strength going on here. It's all amateur stuff at the moment. But that's okay. Blue professional bars at highs is kind of taking profits. Let's just sit on this. I was hoping for a break above 39s just then, just to kind of race away, but no, not yet. All right, here we go. The numbers just come out and give us this little kind of wiggle. We're up to 39s. It's kind of flat topish here. Market doesn't like that particularly. You can see it's more noticeable here. It's a tiny spike up at 9.25 there, but it's kind of flat topish, so it tends to kind of jump through, showing strength. All that was amateur bars and some weakness after that, but not profit taking yet, I would suggest. So come on, let's get this thing going. We've got another consumer sentiment coming out at 9 in about 10 minutes. But there we go, so at 39s we should make a little bit of a run for it. Okay, 9.25. Well, blimey, they just ran stops there, and woohoo, we just rocketed up. 7,000, 9,000 rate. Okay, the initial target was 42 even. We just got a 41.75s. Move the target out to 44. That's a fairly decent read. So should be looking for kind of pullback under trends on the 500 tip bar charts and kind of the next place up, where obviously this is an important kind of area around here, just kind of around the 44s. So we've got resistances kind of coming in here. And a blue professional up bar. Not great. Could be signs of some initial kind of profit taking, but that was a whole bunch of professionals maybe just kind of gapping us, getting us through through this move, kind of getting going. There we go, that's our exhaustion pattern. That's kind of getting us going. So anyway, 44 is what I'm looking for, kind of up here. So let's keep holding. Well, we got as far as 42.75, it's a little bit of a double top. Kind of, we're just sitting around my original target of 42s. And we've got 2 minutes, then we've got consumer sentiment coming out. A little bit crazy to be holding through that, especially we've got 4 in the bag and we just rushed to this exhaustion pattern. Blue professional bars kind of come in, but it's no end of trends. All we've done is just hit a resistance line on the 500 tip bar chart, and these blue professional bars were kind of almost jumping us, gapping us above this little congestion zone, kind of getting going. I feel as if I'm talking myself into this trade rather than just being logical, sensible. Let's see, keep holding. Alright, well here we go, triple tops do not exist, they're always going to get broken. It's almost like a flat top here. 1500 there is a resistance, just coming at 43s. If we're going to get a break to go pull back to end of trends, probably going to go bigger than 44s, but let's just not be dumb about this. Okay, 9:01 AM. See if we get just a lift through. All of a sudden get to 44s. Come on, come on. Okay, 43.50s. 75s. And I'm out. 44 even. Excellent. 4-6. One shot, one kill. What's it running to? 44.50s. Yeah, this has got to go end of trend. Yeah, more in it, more in it. That's okay. So, not bad. Out at 9. So, I'm going to leave it there. Done for the day. Not sure where we're going. But this has probably got a run pullback end of trend. So, I've exited too early, no doubt, but that's okay. Alright, and what is that? We got a day off tomorrow, Friday, Good Friday. So, me done for the week.